Let's do it.
Let's do it. Thank you very much for joining us, Yuval.
My pleasure. Good to be here.
Yeah. Yeah, it's your first episode, I think, on Griffin Uncut, but you have actually been at Griffin for quite a long time. You were
Uh,
employee number, I don't know if you remember.
Probably about 13. I mean, there were 15 of us at the time, including David and Alan, co-founders.
Yeah.
Of the people remaining, I think I'm the third longest tenure, which is insane.
Wow.
But yeah, been almost 5 years. What's 5 years in between friends?
5 years at a startup bank and you're still here.
I know. Yeah, it's been a bit of a wild ride. I didn't expect to still be here 5 years in, to be honest. When you join a 15-person company, you never know what's going to happen, right? Like you're thinking maybe 2, 3 years ahead, not five. But here we are, and I'm very happy that we're still here and that we're still going, that things are going well.
I'm very happy you're here. Do you want to walk people through what journey you've been on over the last 5 years? I mean, I know how many different roles you've done, and done very well, but I think it would be very cool for people to understand, like, yeah, that that path that you've taken.
Sure. So I joined Griffin, as I say, when there were 15 of us, with I would say the beginnings of a tech platform and a dream. Um, and some progress in becoming a bank already, because when I joined we were about to submit our the second iteration of our regulatory business plan to the regulators, which is basically just an extremely long document. I think it ended up being about 375 pages, outlining almost everything that we planned to do, in a good level of detail. So that included like history of what had been done to date, why the company is being founded, who the team are, um, how we plan to hire in the next like 24 months, as well as what the business model is, who our customers are, what problems we'd be solving for them, how we solve them, what makes us different, and then into the weeds of, well, what will the financials look like? What will the risk management look like? How are we going to mitigate for XYZ problems kind of years down the line? Um, and so yeah, that was kind of when I joined, we were about to submit the second iteration. So we'd had, up to that point, I mean, they had had uh, a bunch of meetings with the regulators, kind of submitted one iteration of this, gotten a bunch of feedback from the regulators, worked to incorporate it. Um, and then, yeah, we hit submit at the end of my first week. Um, I had joined, yeah, I mean, so I was, one of the first things I did was just help to work through the feedback tracker and kind of
Oh,
like find the references, make sure that where we've, like where the regulators have given us this comment, here's where we've done it. Here's the evidence. There we go. Um, so yeah, when I joined, so I'll give a bit of background. So I joined, yeah, back then, in the operations function, which was basically just one other person and myself, reporting into the COO. And the brief was basically just like, you're going to get to do a bit of everything, which was really what I was looking for. I'd done a year working for another fintech that didn't go so well, and the company was winding down by the end of it. Um, and what I found was I loved the startup kind of environment. I found like the fintech stuff way more interesting than I expected to before I'd got into it. Um, and I had this kind of great experience of like rotations in the first 6 months, and then moving into like quite a broad role where I'll get to, touch a variety of projects. And I was like, cool, this is awesome. I'm not done with this yet. Let's find like, let's see what else I can do. And that previous company was a, Series A kind of 75-person team when I joined. And I said, okay, let's see if I can find something even earlier. Um, and as I said, like when you join a 15-person company with some money in the bank, and a pipe dream, like you're taking a risk. And like I was super excited to be here. It was literally like the perfect opportunity. And so yeah, like as I said, I joined in operations. When we hit submit on that, the next step was, well, you've done like the big plan. Now let's like build the framework and the foundations of the actual bank. So we had like 70 plus policies we had to write
Yeah.
across like loads of different areas, a lot of them in risk, but covering like, cybersecurity, covering financial crime, covering operational resilience, covering literally everything, as well as doing the more detailed kind of financials and the kind of capital and liquidity management frameworks, and just stress testing the business and a lot of that. So I came in, I project managed the kind of next phase of that, and I worked on a bunch of different pieces with the other people in operations and the rest of the business because you're a 15-person team, you end up kind of doing a lot of different things. So that was great. And then what happened was the CFO was a one-man band at the time, or finance was a one-man band. We A few months after I joined, hired the first finance hire, but even then there were only two people. And I think he won't mind me saying this, but the CFO was very technical and wanted perfection in terms of the content, but didn't really care as much about the design and the presentation of a lot of the tables and charts that were going into his pieces of work. And the feedback from the board members was, "Hey, we need some more charts. We need to make it easier to digest what you're telling us here." So yeah, I kind of volunteered to get involved. And that was the beginning of a long and fruitful relationship between myself and the finance function at Griffin. Um, yeah, as I say, the CFO was very protective of his content. I think he said to me that ICAPS and ILAPS, that's the internal capital adequacy assessment process, and the same for liquidity, are political. He said everyone wants their name on it, to stamp their thing, which didn't feel very kind of Griffin at the time. But I think what he meant was that ultimately it's a big piece of work that reflects on the kind of business as a whole, and everyone wants to be seen as contributing to it. So he was worried that I was just coming in to try to do the same, I think, is reading between the lines. But very quickly, I think he saw that actually I was just trying to like help him. And he seemed to like my approach. So next it was, "Oh, actually, you seem to get this stuff. You've never worked in it before, but you seem to get it. So do you fancy helping me to design the stress tests?" And I was like, "Okay." um, and then it kind of spiraled. So I went from like,
So wait, hold on. So
yeah,
can we just pause here? So you're a few years out of university. It's
yeah,
your second job. You're helping with a bank license authorization process, and then you're jumping into financial stress testing for this new bank.
yeah, for a big old hypothetical bank.
And you've done an incredible job, but obviously the results speak for themselves. But like, was it not scary? Do you not think like, hmm, this is
Yeah,
this?
it was scary, but also like, so Sam, the CFO at the time, was like incredibly generous with his time when it came to kind of bringing me up to speed, like really coaching me through it. And to be honest, it was like one of the like biggest periods of like learning in a lot of depth, and like you don't really get like how like it was kind of one of those situations like, yeah, it was scary, but equally I was being given the opportunity to spend a bunch of time one-on-one with this like seasoned bank CFO talking me through this like complex stuff that if I wasn't at a 15 or however many people by that point we're in a person startup, then like no way in hell I'm getting an opportunity to do this stuff. So I was just kind of like all over it. And it was really interesting, and it was really like, it was quite fun. It was stressful, but it was fun. Um, and we were working like this was also in the middle, like we were in and out of lockdowns through this period, so we were kind of just like nothing else to do but just work. So we'd sit in a cave, and he was at the time like he had moved house shortly before going into lockdown and was literally like sitting on cardboard boxes. I was in the in like a room in my partner's parents' place, just kind of working through the evenings. Like, they'd ask if I was joining for dinner that evening, and I was like, can I get back to you in an hour and let you know? And so it was just, yeah, it was mental. It was a lot of fun. It was, at times I was pulling my hair out. and just thinking like, how the hell are we going to get it all done in time? And there was pressure from investors, there was pressure like internally because we had set very high standards, and we wanted to make sure that we could submit something we were really proud of and that we thought was going to get the reaction we want from the regulators. Because ultimately, you get one chance to make a first impression. You also get one chance to make a second impression, if that makes sense, which sounds really dumb when I say that out loud. But, by that point, the regulators know us to a certain degree. And this was like, okay, but like, show us that you really get it. Show us that you really understand our expectations of you and that you're going to plan a business that hits those. So yeah, it was, as I say, a lot of fun
Yeah.
and like a huge, very steep learning curve for me. But luckily, I had the support around and the kind of coaching and mentorship that just meant like I could take it on.
You jumped in, and yeah, that's amazing. Because I guess not many people in the country, in the world, maybe can say they have helped in that bank authorization process. It's not a very common thing that happens, and to have actually like been in the thick of it when when it
Yeah,
happened for Griffin is quite cool. How about we? I say we. I can't do it. How about you?
yeah.
Explain to people, maybe just at a very high level,
Mm.
what yeah, what is this ICAP, ILAP, like this
Mm.
capital adequacy liquidity? What are these documents and why are they so important for a bank? And yeah, like if yeah, let's say someone doesn't know much about it, how would you describe it?
Cool. So at the core, these processes are about risk management. Um, Now, after kind of the big financial crash in 2008, the Basel Accords came out, which basically kind of redid how banks manage capital and liquidity and made the requirements a lot more detailed, a lot more sophisticated. It's not perfect. A lot of it is still weirdly rudimentary, if you ask me. Um, but ultimately, there were rules that were put in place by the regulators across kind of Europe and many other places that said, like, now you need to run these processes in a way that we think is more appropriate. And ultimately, it's about like, especially for a new bank like us, it's about mapping the business out and understanding where your risks are, understanding which ones are likely to create sufficient like or like a big enough headache for you in terms of like losing money or in terms of like losing liquidity. So, for example, you know, one of the obvious ones is, well, we're reliant on external funding as a new bank. Like until you hit profitability, you're always going to be burning money. Um, and capital in this context is specifically like own funds rather than so it's not just cash. So like taking on a loan doesn't help you. It's just how much money has been invested into the business essentially. Um, and so yeah, it's well, what situations arise and what risks do you have and how's that going to evolve over time? And then so that's both on capital and liquidity, and then you submit them to the regulators. They review it, they have their kind of evaluation process, and they come back to you and say, okay, we agree with your assessment here, and therefore your capital requirements for the next X period of time are this, this, and this. Your liquidity requirements are this, this, and this. And you're required to do this typically once a year or more frequently if you have like material changes to your business model. Um, so yeah, that's
But
what they are about.
yeah, so interesting. So there is that process then where you agree it with the regulator, and then yeah, okay, it gets reviewed on like a yearly basis. Most
Yeah,
yeah,
I
most
mean,
yeah,
you propose essentially what you think it is, and the
yeah,
regulator has like it's completely within their rights. If they think, for example, that you uh, have kind of underemphasized a certain risk, they can give you a top up. Or if they think, like, for example, if you're a really big bank and they consider you systemically important, which means basically if you fall over, the ramifications are going to be pretty widespread, then they can give you like an additional requirement on top of that. Or if they think that your governance isn't sufficiently strong, or that you've got a particularly risky business model. Um, so yeah, it is a dialogue, but they're also not a consultancy. They're not going to tell you here's what it is. It's you do the work, you put it forward to them, and based on what they see from you, they either agree with it or add some on top.
that makes a lot of sense. The more you explain it, the more I'm thinking this is an incredibly consequential part
Yeah,
of the planning of any bank, and it's an amazing experience that you must have had designing these things and putting them forward. Yeah.
yeah, and then also having to speak to the regulators about it when unfortunately the CFO parted ways with the business, and suddenly I was the person who was most involved in this work when we were getting the feedback and doing the review sessions with the regulators. So that was fun. Um,
No pressure, Yuval.
yeah. Hey, I mean, the awesome thing is like uh, we were still are, but like at the time, especially with a smaller team, like you're an incredibly tight group. People jump in and support. So when the CFO left, the COO and the CRO both just like immediately jumped in, supported us like through the rest of the kind of process. And we were close to the end, so it was all right. But then there's always stuff that comes up. There's always unexpected like uh, tweaks that you need to make that you hadn't spotted earlier, or that the regulator comes back with a bit of feedback that you didn't expect. And yeah, it's all right.
Incredible. And the end result was we became authorized March last year. Um, and what was it like switching from okay, we're planning to be a bank and this is our
Mm.
plan to, oh, we are a bank now and there's real money here. How how do you, in that kind of really strategic finance role, how does that change how you work and like what you do, like when you're in like as we used to call it, like the run mode of being a bank?
I'd say that the run mode happened before we kind of properly like got fully authorized. So we had the 12-month mobilization process where you've been granted the license, you're allowed to do a kind of limited subset of activities, and you have kind of a year to prove out that operationally things are working as they are, that you've addressed specific pieces of feedback that the regulators have given you as a kind of condition of fully getting the license and the like. And so in that period, we had a few things happen that were pretty different and like a big culture change, I would say. Um, One thing was that before even kind of talking about like the banking side of things, we had our first customer for our compliance kind of solution, Verify, which you'll remember was like a big moment because suddenly we went from, as we said, like this hypothetical bank where we've done a lot of work on planning, but we haven't had to execute a whole lot, to suddenly there's someone that like you're on the hook for, like they're paying you for this thing, and if it doesn't work out, then their business loses out, and inevitably like will be in a bad way from it. And also because it's the first customer, that's you build a reputation by delivering, by helping provide good outcomes for customers. And so like having a sample size of one, you really have to get that right, and you really have to make sure that like they're happy with it. So for example, like we ended up launching I think 2 weeks before we thought we would, as in we'd agreed an original timeline. We had to push it back for delivery reasons for both sides, and then we had like we were ready and they were ready, so we said okay, let's go for it. But we hadn't had any customer support system set up, so it kind of in a very hectic day at the office, I set up a basic like ticketing function for support queries, um, and was like going back and forth with them through like the Slack channel that we had and through emails that they sent over, and it was just chaos. But it was also like you very quickly find out like the best, it's a cliche, but like the best way to find out is just like to try something, right? You figure out what you need to do like pretty quickly. So there was a lot of that, I would say, and that kind of principle applies like beyond just that example, but like generally every time you do some like we launch a new feature, we brought a new kind of customer on board. Like there's all of this kind of like time pressure and accountability that is there that was there in a different way before, but like yeah, somehow you feel like you're on the hook in a different way. And then there was a lot of like just actually operationalizing things. So even on like the finance side, you go from here's a really extensive document that outlines what we think our capital requirements will be, what metrics we're going to monitor over time, like what our risk appetite is for lots of different areas. And then suddenly you go from like, we think it should be this based on the hypothetical numbers to like, oh, we're live now. We have real numbers to plug in that come from our kind of management accounts month on month. And suddenly you have to, you have to like operationalize those systems as well. And so you end up like, for example, with a bunch of metrics that you had a risk appetite that you had set for based on what you expected to happen. And then things happen a little bit differently. And suddenly, oh yeah, the risk appetite there isn't quite right. Like we actually need to be tighter on this risk or be looser on this one. Like we have to accept that in the first few months, it's going like there's a glide path to the long-term shape that we expect. So yeah, there was, I think from my perspective, those were like some of the biggest ones. It's customers being live and demanding stuff, and it's us having to like walk the walk rather than just talk about it. But to be honest, like, and I'm sure you like, I think a lot of us here were like this. Like, you could talk about a thing and plan a thing to infinity, but like, we had this big, like, almost like impatience. We were like, we really want to get going. Like, I'd spent 3 years at that point, or maybe even four. No, yeah, 3 and a bit years telling my friends all about this awesome business we're building, and they were like, "Oh, how's it going?" I'm like, "Yeah, we haven't launched yet." And they're like, "Oh, but you've been there for 3 years. What's going on?" And that's like really atypical for startups, right? Because,
If it comes up,
the
that's
break
fine.
things move fast kind of adage, like, is what people expect when you tell them you've joined a
Okay.
15-person startup.
Yeah.
And so there was definitely a degree of that like impatience, like we need to just get going, like,
Yeah.
yeah. Um,
I
so yeah.
think it is part of the unusual compared to like a typical software company or a typical SaaS company. It's like, hang on, you've been going for 4 years and you're not live. It's like, yeah, but we've got a banking license in that time. Like, it's a bit different, and that
Hmm.
allows us to do so much more than we would have
Yeah.
without it. So, uh,
And
yeah,
what's really interesting is like at the time, like early on, when I was kind of
mm,
getting to grips with like what are we trying to achieve here, one of the big things we said was, okay, you know, the UK since 2015 has really opened like paved the way for new entries into the market, and like encourage competition that way, which I think in banking has been like a resounding success, right? If you look at like the penetration that Monzo and the like have had, awesome. Um, and so we were thinking, okay, right now it feels like it's as easy as it can, or not as easy as it can be, but it's approachable and it's achievable to become a bank. But even then, it's still a lot of work. Like the expectation was still it would take us, probably a year or two from when I joined to get authorized. Um, and in practice, it was longer because, I mean, for one, I think the regulators upped their expectations and raised the bar a bit on what it takes. So where previously, I spoke about our regulatory business plan, like other banks that applied a year or two earlier had like a 50, 75 page one. We had a 375 page one because like the original one that we shared was shorter and the regulators wanted like way more depth. And it's similar kind of beyond that, right? Like loads of other areas of the kind of expectations were bigger. So like when we talk about, you know, the the reason we wanted to was like, A, it's a core part of the product offering and the experience we want to deliver for customers, but also B, it's a competitive advantage, right? Because despite it having been made a lot easier to enter the market, it was still, a lot of work and a lot of hoops to jump through. And once you're live as well, it's a lot of requirements that you have on an ongoing basis. It's expensive to be a bank. Obviously, it has its advantages, but like it's not a simple thing. Um, so yeah, it's kind of like we think it was worth it, and like I think our customers now are seeing the benefits of it. But at the time, it was like, oh my God, this is a mammoth task. Um, and it comes back to, I mean, I think Alan may have, I can't remember if he used this in his episode, but I'm sure he's the one that I've heard saying this quote a lot. There's the Ronnie Coleman quote, the old bodybuilder, who said like, everybody wants to be a bodybuilder, nobody wants to lift heavy weights. Again, taking out the expletives there, but and it's exactly that, right? It's like, know, I mean, I remember speaking to David and Phoebe about this way back when I was trying to like get my head around it. And I was like, okay, if we're going after, for example, a lot of these like e-money institutions, ultimately, wouldn't it be better for them long term to be a bank? Aren't we just, doing a lot of work to maybe get some customers on board that don't really want to be a customer? They're only a customer for convenience. Um, and at the time, the answer was, well, it depends on their business model. Some of them will want to be banks long term, and that's okay. And we may as well work with them and like give them as good an experience as they can, so that maybe, maybe they don't, mm, maybe they decide that they're having such a good time with us. This is going to sound a little bit weird, but like they're having such a good time with us that they don't need to go and do that. Um, and I think that like now I would probably say, well, yeah, maybe they'll want to do that, but it's like it's significantly harder today to become a bank than it was like 3 years ago, 4 years ago, or even like, or let's call it. I mean, it's now 2025, so eight years ago, whatever it was that Monzo did it. Um, so yeah, I mean, I still think that way. And I think that like generally our approach at Griffin is like we want the experience and the deal to be good in like as good as it can be for our customers, so that like it almost removes the need for them. Like for example, like we've really pushed say like sharing the interest rate, and like giving really competitive rates on payments, for example, because ultimately like if a customer grows, it does really well, that's when it becomes like the unit economics become even more important to them. And that's when they're maybe at a point when they could decide, hey, we can become a bank ourselves and cut out a middleman here. But if we're giving them like similar rates to what they would get if they got authorized themselves, and we're passing on most of the interest to them as well, suddenly like it's not as important, right?
Yeah, it becomes a bit less enticing to go through that big process.
Yeah,
It's
and,
very,
and ultimately,
yeah,
like the vision is we want to make it easy to launch financial products, right? We want
exactly,
to
exactly.
like that's why we
That's the whole point.
exist.
Yeah,
And so that's like to me, that's the thing I've been like the most excited about is like as we grow and scale and as we get more customers on board, we can do that better, right? Like we
yeah,
like in 2 3 years time, we're going to be even better at doing that for our customers than we are today, and
yeah,
we're better today
yeah,
than we were a year and a half ago.
yeah, exactly, exactly. Yeah. It's the one thing we do, help you implement
Yeah,
financial products. Yeah.
exactly.
Um, it's our speciality. You've now switched into more of like a commercial role. How has that been going from that very deep financial role into the commercial space?
It's been really good. So one thing we kind of skipped over here is so I was in operations for probably about 2 years,
Good point.
after
Good point.
joining, 2.5, and then I moved into the finance team because I'd basically been in those 2.5 years. I would spend a few months at a time supporting finance on projects, and then we'd kind of submit. We'd hit a milestone. There would be less pressure, so I'd go and work on other pieces. So I mentioned like CRM selection, back in the day, a bunch of different projects on that side. And then suddenly there would be pressure on finance again, and I'd move and help again. And so eventually we made that kind of move permanent. Um, and so for, best part of 3 years, no, 2.5 years, I then owned like our strategic finance function, which meant a lot of kind of spreadsheet modeling work, but also like opportunity to engage more closely in fundraising, to work more closely with the commercial team on pricing, to support certain customer conversations as well, some supplier conversations, and to build out the kind of like reporting and risk monitoring suite within the finance function as well. Um, yeah, I wasn't the only one doing all those things. It was like a lot of teamwork, which was great. And so yeah, but after a while, I kind of wanted to get closer to like the customers. I felt that I'd kind of done a lot of that for a while, and again, considering I was doing a lot of that work anyway when I wasn't formally in the finance guild. So then, yeah, this was an opportunity to try something new, to again like move closer to the customers and to I think yeah, continue that kind of journey of like learning on the job and trying to figure out what I'm doing really. So yeah, I moved formally into this role probably about a month and a half ago, of which I was away for maybe 2 weeks. So I'd say a month into the role, um, and it's been a lot of fun. I think the team is great. I mean, I'm not going to give you too big a compliment, Mo, but it's been a lot of fun getting to kind of work more
Don't
closely with
hold
you guys.
back. Put it in the public. No.
Yeah, yeah, Mo's great. But I think having
What?
like the team is super collaborative, and it's made it like way easier to get up to speed with. I mean, like for example, how we handle certain conversations with prospects, like on the sales side, as well as like on the projects I'm working on. Like, well, what do we need to get out of it, and like what's like getting a bit more context on the commercial side. So like the team has been like awesome, super supportive, super collaborative. And also just like, again, with the context of I'd been helping to build this thing for a long time and then working kind of on the back office for a long time, suddenly getting to get closer again to the customers and be like, okay, yeah, like speaking to people and being like, yeah, we can solve this problem for you today is like super rewarding. I think like it's so great like to just use that as a moment to reflect back and be like, oh yeah, like we're actually doing this now. Like I'm doing it at scale and doing it like not, you know, and each deal kind of I think where we are commercially now as well is that like we've worked with enough customers and a broad enough variety of kind of verticals that like most people that come to us now, it's like, yeah, we've done something that you are asking for this type of company already, like multiple times. And so it's more repeatable. It feels more like we have the right expertise and kind of product capability to just say, yeah, we can do that for you. Let's go.
Yeah.
Which is like really great, especially because, you know, the vision that David and Alan have had from the beginning is like, you know, we want to look and feel like a SaaS business when you come to work with us. We want you to be able to poke around in the sandbox, to try before you buy. We want to be transparent with you. We want you to understand the pricing. And so like getting closer to that, that's another thing I'm really excited about is like, you know, we should be able to in the next like couple of years get even better at that, becoming even more of a kind of smooth, low touch commercial journey that ultimately then like it's up to the customer. It's not just like, do you like speaking to us? It's do you like what you see? Does the deal make sense for you? And like, is this what you want? Because like if it's not what they want, then great. Like they shouldn't come to us because like you don't want a relationship where like they felt like we were a all right option but not amazing, and like long term it's not what they need, and it disappoints them. We want to be like a long term partner that's a good fit both ways. And so I think like helping our customers to almost like self select is also a really exciting thing because like makes sense for both parties, I think.
Exactly. I think that's one of the things I like about, I mean, I hate the word sales, but our sales process is that it is more, it's like side by side. We're not trying to impose anything on people. We're trying to solve a problem
Hmm.
with them. And if it turns out that we're not the solution, it's like, fine.
Yeah.
That's not the best, like you say, that's not the best solution for you. And we shouldn't try and push something that isn't the best. But what I really enjoy, especially as we've been working together more closely on the commercial side, is how your not just finance experience, but that and your operational experience and the experience that you had in that authorization process just shows that you like understand the bank like from top to bottom. And I think that's just very, very cool to see on the commercial side when it's not necessarily always the case when you talk to kind of salespeople or commercial people. But I think that's what makes you very, very valued amongst many traits. But
I
yeah,
mean, I appreciate that. It's kind of almost felt the opposite to me because like moving into like a different part of the business, I'm seeing so much of what I don't know as well. And also like, you know, today we are where we are. We're in a like, you know, we're way more sophisticated. There's way more like happening in the business as a whole. And so it's like being way harder to keep up with stuff in other areas of the business, right? Which is natural. And I think like, you know, we're working like as well as we can to mitigate that. But there is like an inevitable thing where like again, when there's 15 people, it's easy to know what everyone's doing. It's easy to keep up with all the updates. When you're 80 people, it's like, well, stuff is happening all the time and you can't keep up with everything. And I think now I'm like, oh yeah, I'm in a new role. I'm outside of my comfort zone, and also like look at all this stuff that the commercial team have been doing that I had no idea about. Look at like how like detailed, for example, like the like speaking to prospects, and they'll ask about like the financial crime arrangements and all of that. And I'm like, I have a good level of understanding of how it works, and most questions I'm like all right to answer and everything else, but there's like way more detailed stuff that would have thought I already had just like by virtue of being here. I'm like, oh, actually, I haven't noticed what we've been doing to deal with this particular issue. Um, so yeah, I mean, on that front, it's great because I'm back in the kind of like, you know, every day's a school day, uh, constantly feeling like I'm the dumbest person in the room,
No.
which is exactly what I want, right? Like, um, so yeah, it's been
Oh
it's been
man,
really fun on that front.
that's epic. That's epic. Yuval, thank you so much for joining. I'm sure this is not going to be the last time. Uh, yeah, I think your journey through Griffin is pretty amazing. And thank you for sharing it so honestly. And I'm sure we'll be back soon to talk about the next phase of
Thanks for
this
having me. It's been a lot of fun.
project. Awesome. Thank you, Yuval. Thank you.